Okay. Right.
Okay. So as Carol said, my name is YP Chen, and I am very honored to share my perspective and experience in investment with you today. Before I go into investment, I want to give a little bit about my background because this is very relevant to my investment philosophy and my investment habits. And I was born in 2 years before the Cultural Revolution. When I grew up, we didn't have that much money. For my birthday, I had 1 egg for birthday. You know, those days in China, everything was ration, 2票. So, you know, we eat 1 pound of pork per person per month. So when you grow up so poor, you tend to be very frugal. At age 16, I went to Hong Kong. We didn't have money for me to go to high school. So I ended up working in a garment factory during the day. I studied English at night. So after a year, I went to New York City. Few days after getting off the airplane, I worked in a Chinese restaurant, making $2.25 an hour. And those days, my career aspiration is I want to be a waiter because they were making 4 times more money. So I went to high school, one of the most high school in New York City. I get marked in the bathroom. I worked 3 part-time jobs after school and the weekends. And that time, I only had one ambition. I want to get out of Chinatown. I want to get out of poverty so I get into the middle class. So I studied really hard. I graduated top 3, number 3 out of 700 students. I went to Polytechnic University, studied electrical engineering. 4 years later, I graduated top 10%. I get a job for the TRW and the IBM. Essentially, in the span of 7 years after I went to New York City, I went from someone who lived below poverty to middle class. So that was pretty good. I was making a lot more money than my parents combined because my parents did not speak English. And after being an engineer for about 3 years, I was with IBM and get my master's degree in computer science and telecommunication at Columbia University. But 3 years into it, I realized I do not want to be an engineer anymore. So I was looking around, then I picked up a magazine called Business Week. I really enjoy reading it. And I also get hooked on stock. In about 1989, I was subscribed to an online show called PCFN. For some of you do not know, those days you still use 64-bit modem, really slow. But I was one of the really early adopter of electronic trading. Long story short, in 1992, under IBM sponsorship, I went to Columbia Business School full-time, and then I worked at IBM part-time. So for about 2 years, I worked 100 hours a week, and I got my MBA in 1994. And opportunity arise, I joined Honeywell to do M&A acquisition. When I was working in China, I thought that I was well-equipped, well-educated, I'm going to be a billionaire. So I did not pay that much attention to financial planning. I thought, you know, I'm going to make quite a lot of money. I don't have to worry about it. And my wife also has an MBA from Columbia Business School. We were classmates together. So I worked with Honeywell, the German partner, for a few years. I started my own business in Hong Kong. When I started it, I started with $6,000. My partner and I each kicked in $3,000 US, and was very smooth for the first half year. We started it, we raised $500,000, and then we were going to install one more system. We're going to get $5 million investment from one of the richest guys in Hong Kong. But the project was a failure. For the first time kind of in my career, there was a major setback. And then the $5 million did not come, and Asia financial crisis happens. I immediately cut myself out the payroll, including about 10 employees. And my wife was and then I realized that, holy cow, I need to get a job because my wife was expecting our first kid. So I get a job, work at venture capital group. And then after I stabilized, then I went on to took a company, an IT consulting company. When I went there, we had 15 people. And then I took it from about 15 people to 70 people in 1 year. In the process, we raised $5.5 million. And things are going really well. And the bubble burst. And we're able to scale back the business because we have over $5 million cash. But life is not as easy as I would thought. And anyway, we were bringing the business back to order. And 2 years later, I sold my equity. I made pretty decent amount of money. They come back to become the COO, then CEO of the Single Machine, a public listed company. So essentially, it took me about 23 years from dim sum in Chinese restaurant, making $2.25 an hour, to be a CEO of a public listed company. And then I really realized that, I was okay. By then I was a millionaire, but I realized that that's not enough. By that time, and I really think about how do I diversify my investments. So the next chart will tell you more story here. And then, basically, I was managing the company, do a cleanup for about 3.5 years. Then I sold the company. But I was a professional manager, so I made decent money out of the deal. Then I came to Seattle about 13 years ago, started working on my own investment, doing management consulting, investment consulting in Hong Kong, China, Taiwan, South Korea, and Japan. So over the year, I've been really independent. So about 3 years ago, I bought a software company in Seattle. My day job now is running a software company. But my side job, I do a lot of teaching, like this kind of stuff. I also taught at Seattle University, and also I'm teaching at Dartmouth Business School. I also teach in some university in China as well. So I want to share with you my story because it's relevant directly to what I have done in terms of wealth creation. Let me show this chart. This chart, I track back about 17 years ago when I came back to the US, 2003, I start tracking my different investment because I realized that making money is not easy. And I start to pay attention to my investment portfolio. So started 2003, I start tracking my different investment. All this data you see is actual data for my spreadsheet if I take out the relevant number. So interesting enough, the orange line, that's how my total wealth accumulated over the past 17 years. Before, I primarily focused on retirement, stock, and cash. I was not diversified at all. And interesting enough, we bought an apartment in Hong Kong in 1998 after the market dropped 30%. And then by the time we left Hong Kong in 2003, it dropped another 40%. From top to the bottom, it dropped 70%. So we did not panic. We sold our apartment in 2007, right before the market crashed. So I was out real estate completely. And what is interesting is from 2017, September, until 2011, I was out real estate completely, and therefore I was not impacted by the housing bubble. But when I realized that the price had dropped so much in 2003, I went back to the housing market aggressively, and now my real estate portfolio is my biggest investment in my portfolio. So as you can see here, it's really certainly certain decisions you make in life could impact you tremendously in terms of your wealth. And so what I've done is, you look at my portfolio today, I have stock, I have retirement primary stock. I invest in private company. I invest in startup. I invest in real estate. But nevertheless, what is interesting is because I pay attention to it in the past 17 years, with the exception of the global financial crisis 2008, 2009, our wealth dropped about 26%. But other than that, it keeps going up every single year. There is part is luck, part is really knowledge and habit that have been accumulated over the past 30 years. So the net effect is that in 17 years, my total asset increased by about 333%, average out about almost 20% a year, which is not bad, okay? So that is kind of, in the future class, I'm going to dive a little bit more about portfolio assessment, portfolio allocation, but these give you a snapshot of how one should look at a portfolio. How does the wealth compare with an average Joe in the US? If you own $1.3 million, $1.2 million in the US today, you're top 10%. In order for you to get to top 1%, you got to own about close to $12 million. So question to you is like this. Here's the statistic. 20 million people in the US are millionaires, 6%, 6.1% of the US population. In the past 2 or 3 years, there's a lot of wealth creation among the millennials like yourself. But my question to you is, are you a millionaire yet? So if you're not, maybe this is the right class, right? And what's interesting, you look at the millionaire millennium, on average, they own 3 properties. I was never big on property investment until I studied very carefully 2002, 2003, until 2011. Then I bought a few houses in the bottom of the market. So, so this kind of give you some perspective and where you are relative to someone else. Also, I mentioned before, it's not easy to make money because 84% of people, they're affluent. That means they are a few $1 million asset. They start from nothing, and most of them become wealthy by the time they're age 65. So the Bill Gates, the Mark Zuckerberg, those are 1 hour, 2 hours, 7.5 billion. Those exception. For most people, you got to build your habit and accumulate your wealth over time, and then you will eventually make there. I have a mentor. He's now a mentee. I've been advising him for the past 7 years, and we had the same discussion about 2 evenings ago. And he's about mid-40, but now he's about the top 3% of the population in terms of wealth. But for peer 45, he's the top 1%. So, but he also shares similar trait as what I mentioned about before. And the fact of the matter is that when you're young, you believe you're brilliant, you went to the best school, money goodbye, you're going to be a billionaire like Bill Gates, like Mark Zuckerberg. But the reality is that most of the time, by the time you're 30 and 40 and 50, you realize not that easy to make money. But if you start your habit in terms of wealth creation, wealth preservation in your mid-20s, for you, most of you making $100, $150, $200,000 a year, if you do right, I pretty much guarantee by the time you're 40, you'll be a millionaire. If you follow a certain habit, certain thing or doing thing. One of the things you could do today, if you learn nothing today, is your 401k. Let me give some number. I worked at IBM in 1988. This is a little bit too small, but I'm going to give you some high level. I left in 1994, so 6 years. I only put in $10,000 on my IRA. Okay, only $10,000. I'm not touch it. As of today, it's $112,000. So, but not every single year I made money. 7 out of 27 years, my IRA, my 401k, IBM went negative. At 2008 financial crisis, my portfolio, this particular portfolio dropped 40%. But I did not panic. I let it rise, and guess what? At about 27 years, my total return is almost 1,000%. The average gain since 1995, 36%. Better than Warren Buffett's performance. 36%, right? What did I learn from this one? I want you to take notice. If you know nothing today, this is the most important thing, because all you're looking for, the Microsoft, you know, the Amazon.com, the Google, in all these companies, they have a very good 401k starting today. Don't wait until tomorrow. That's number one. Number two, maximize your contribution and maximize the matching by your employer and contribute maximum allowed by the law, because that is tax deductible. Also, if you're not a sophisticated investor, don't waste your time. Let's put it in the passive index fund with low expense. That's the winning formula. And then leave it alone. Don't touch it. Because time value of money, compounding, like what I show you here, at 27 years, I only allocate portfolio a few times. It turned $10,000 to $112,000. There's no magic formula. With your intelligence, your education, you could do today. Any question before I move forward? Because you just learn this side, that's good enough for today.
We have several questions in the chat.
Okay, let me look at the chat. Okay, first question is, everybody please ask a question in the chat. Okay, have we already missed the best time of investing in real estate? To some extent, real estate, you got to look at it. Are you a short-term investor? You like to flip, or you're a long-term investor? If you're looking at it, your flip today is too risky. But if you look at buy real estate for 10 or 20 years, it probably does not matter. So that's question number one. Yeah, from the chart, the biggest return comes from real estate investment since 2011, because I bought it absolutely in the bottom. All my real estate investment that I still have now, I bought it 2011, between September 2011 and November 2013. Look back, I'm going to show you a chart. That's the best real estate investment for the past 20 years. I happened to catch it. Part is I'm lucky. Part is I knew what I was doing. I'm going to show you. Okay, next question. Is passive index on something like TQQQ? I don't know the specific number. For example, would be S&P 500 index. Could be NASDAQ index. Could be something like that. It's basically it's a general market. The best, if you don't know what you're doing, just go into Vanguard S&P 500 index. You know, today it might be high, but you average out low and high, doesn't matter. Consistent contribute every single month from your paycheck, you'll be okay. Let me see. Someone said Bitcoin gave me 100,000 in a year. I'm not smart enough to know if Bitcoin is going to be 100,000 or go down to zero. So personally, as I'm going to tell you today, I'm an old-fashioned guy. I don't invest in Bitcoin. I know a lot of you are very sophisticated. Go for it. But it's not my cup of tea. Okay, WHF after real estate in the long term. WFH, what's WH?
Work from home.
Huh?
Work from home.
Work from home real estate in the long term. Yes and no. Here's the thing. I bet 90% of you work from home because you're a high-tech worker. But you're a restaurant worker, you work at Costco, you work at Fred Meyer, you work at TJ Maxx, you know what? You cannot work from home. So I think that's the reason why you look at the real estate where it goes up is the area they have a lot of high-tech worker. But all without the high-tech worker, work from home does not work, right? So that's something I cannot invest fund like typical or up in my 401k because provide different plan, but invest something similar to SPY. Yeah, SPY is fine. So you just found similar thing that provide you what you need. So for me, I'm not giving you a specific advice what particular stock or index fund to buy. I just want to give you a general idea, general concept. Then you look for yourself. And then in the future, if you go in the class, I'll give you some criteria, how you're going to select particular index fund versus, in other investment alternative. Okay, let me ask one question. The real estate investor good in mainland China? I have never touched mainland Chinese investment. The key thing, I think from a macro perspective, China is really has a long real estate bubble, but the question has been going for the past 40 years, and nobody know. I'm not smart enough to know when it going to pop. I'm going to have a chat and show you. Let me see what else. SP 500, how much net worth is considered as financial freedom in the US? That's a very good question. It's a function of how much you spend, right? For me, before you, if I have really have financial freedom, I pay my kids tuition $150,000 a year. My kids spend my money, but I could live at $1,000 a month myself, other than housing expense. I'm going to show you why. If someone believes in the time the market will buy SPY always, that does not mean financial advice or similar advice is useless. To some extent, if you believe in Warren Buffett just believes advise people to put money in index fund, avoid the high experience thing. You do not need a financial advisor, pay them 2 or 3%. That's what Warren Buffett said. I agree with him. Okay, what is the best way to get my first $1 million? I'm still far away from it. That's the reason why I'm going to tell you today. I become a millionaire when I was about late 30, early 40. So you're 20, you still have 18, you still have 15 years to go. So that's the reason why what I'm telling you is not about getting rich quickly. That's not what it's about. If you want to get rich quickly, go to spend $10,000 on a Bitcoin tomorrow. Hopefully you go up to 100,000. You'll be okay. You double your money. But that's not a cup of tea that I'm going to share with you. Okay, let me see what else. Do I go to the next opportunity, going to drop the next 3-5 years? Here's the good thing about, I don't know the timing of when the next bubble is going to burst in the real estate market. It depends on the market. You look at historical, the US housing market is 10 to 15 year cycle, but some markets last much longer. I think real estate is not wait for the best opportunity. Is really you base your own situation, you make decisions based on the yield and the investment criteria. You buy real estate based on your own need. Okay, so that's all the question I answered. I'm going to go back to the PowerPoint and I'm going to go forward. Okay, I put this out as advertisement for this seminar. Essentially, what I've done is I found this 8-step process for investment in the past, 30 something year. And key thing about really investment, you got to get a key concept right. Number one is, what is your financial objective? Like the other person asked me, said, how much is enough to be financial freedom? It's a function of how frugal you are, how much you spend a month, Some people, if you could spend $100,000 a month. A person like me, $1,000 is enough, right? Some people could spend $10 million a year because, depending on your lifestyle. So that's number one thing. I mentioned about the power of compound. I turned $10,000 to $112,000 in 27 years by doing nothing. Just leaving the 401k with IBM, right? And then it's really you asked me about Bitcoin. The reason I did not like Bitcoin is I only invest what I know. Because I'm not a Superman. I do not have photographic memory and read everything. Even I read it, I don't understand. So I only invest what I know. So therefore, I don't touch Bitcoin because I don't know. But my mentee, he invests in Bitcoin. He mined Bitcoin. His Bitcoin is worth $2 million. You know, there's people make a lot of money in Bitcoin, but I'm too old for that. So knowing what you good at is very important. So that's the key concept I'm going to share with you. The second one is psychology. There's actually a lot of psychology investment. I'm going to share a few slides with you today. And the most importantly is what's your habit? Habit is that I'm going to use some of the habit that I said. I spend $150,000 my kid to go to college, but I only spend $1,000 a month. That's my hobby. Because why? Because I'm so poor. I ate 1 pound of pork portion for month in China when I was a kid. So I never had that much money. So I live very frugally because that's where I'm coming from. I'm sure all you're very lucky. You are the 1980 90後80後90後20後 then you have wealthy parents. You come to the United States, they pay for your food tuition. You are making good money and they must not come. So you never face hardship. Therefore, you don't know what it's like to only have chicken 4 times a year, right? So therefore, money to you, just, okay, you spend it. It's a very different mindset. So I'm going to tell you, you want to be a millionaire soon, that some of the habit is important. And then, of course, I'm going to talk about how much money you earn. Education normally is a good way for you to earn more money. For me, the way I increase my earning from $225 to $40,000 a year is go through college. And then for me, going from $40,000 to $100,000, go through my MBA program, right? Then, so that education is one way to change your fortune. It's still true today, especially in China and the US, right? Then I'm going to talk about passive income, active income. Passive income is real estate because the house generates cash flow for you even you're asleep, unless it's catch a fire, and unless your tenant burn it down, right? So that's passive income. What's active income? Every day you got to show up at work in Amazon, in Microsoft. Even for home, you got to show up. You don't show up, you don't have a paycheck, right? So you got to think about all these things. So how you create value, right? And then today I'm going to go a little bit about tax planning. Tax planning, 401k. I mentioned about 401k, right? And you do nothing else today. Just make sure tomorrow, go back to your company, make sure you put the maximum in your 401k. And then one thing is that income is how much you take in. But the other one is how much you spend. Let's say you make $200,000. You spend $100,000 a year after tax. You have 30%. You have 140, and you spend $100,000. You save $40,000 a year, right? That's good. But you make $200,000. Net after tax, let's say you're $140,000, but you will spend $150,000 a year. You're negative $10,000, right? How are you going to save money if you spend negative $10,000 a year? So I'm going to show you how you control your expenses, because it's, you look at the P&L, profit and loss is income minus expense equal your net, equal your profit. So those go hand by hand. That's the reason why I'm going to teach you about portional P&L, profit and loss, because that has to do with your income and expense. And of course, a lot of people said, okay, how to get investment, right? Investment is actually easy to get in, but very difficult to make money. So I'm going to share with you about investment option, portfolio management. And the easy thing to do is put in index fund, mutual fund, and then people put in a bond in cash. But today the inflation is 6%. You put the money in the bank, 0.2%, you lose 5.8% on your money, on the cash, which is a bad deal, right? So then how do you invest stock? I'm going to show you how to invest stock. I can show you how to do real estate investment. Then I'm going to show you how to invest in startup and private company, which I bought a private company 3 years ago. So I'm going to share some experience because for me, all this not academic. Even I get my MBA almost 30 years ago, but all this I learned from school, hard knock. It's not academic because it's my experience. I actually went through this. It's not because I get a case from a textbook. I show you what to do. All these things I'm going to share you. It's my personal experience. How I went from a pool kid in China, got marked in the bathroom, making $225 an hour to a multimillionaire. So that is real experience. And finally, Lala, you just I want to buy Bitcoin. Bitcoin is a high risk but high reward. How do you manage the risk with reward? So essentially, what these are the eight steps that I call the wheel of fortune for wealth creation. I go through it in 10, 15 minutes, but that's my lifetime, about 30, 40 year experience in one single slide. Right? I could talk for 10 to 15 hours on kind of unpack it. Any question before I move forward? Should I go back to the question in here?
Yeah, there are a lot of questions.
Okay, let me see. What did I get before? Which one I was? I missed what I know. Okay. Okay, let me see. Okay, what's the best way to my first one? Okay, so it was first when I answered the question. If I see a major opportunity, you see, was waiting for the housing market to drop. Do you think 3 to 5 years? I asked that question. Do you define millionaire include the value of the house or just the liquid asset? The millionaire defined as the net assets. For example, that means if, for example, you own a house worth $1 million, but you have a debt of $700,000. So you look at that as about $300 add to your net worth. So if you have $700,000 worth of cash at start, you're a millionaire. But you don't, your $1 million house does not count because you got to deduct the debt, the mortgage you borrow. Okay. Most of those, the house in BRK worth more than $1 million, then perhaps is you bought BRK, Berkshire BRK. Wait, what's BRK? Is it Berkshire Hathaway?
Bellevue, Redmond, and Kirkland.
I think the Bellevue Redmond corridor, the houses have gone up so much, too good to be true. And I think that I don't know what the future will look like. I mean, we're still going up or we drop. I'm not smart enough to figure that out because I think real estate location, right? Because the politician in Seattle was not wise. They start to create those crazy stuff to tax Amazon.com. Amazon.com screw it. Then they move 50,000 people to Bellevue. Guess what? When Amazon.com is going to create 20,000 and 40,000, Microsoft going to create 20,000, and Facebook is just bought up a building at and build a corridor. And guess what? People do not want to commute. The real estate goes up there. So there's a natural tendency. The question is this a long-term sustainable thing or this is a short-term thing, right? Okay, it's the slide to be shared with us after. I think we can share the recording. I agree that I only invest what I know. Okay, good. Let me see. How do you know thinking trading and if you start with passive index fund is really depending on what you know. For example, if you're very good in stock, trade in stock. Otherwise, you know what? You know nothing about stock. Put it in a passive index fund. Okay, no financial advice or active investors by beat the long term. That's true too. The Warren Buffett tell you. I mean, if you just put an SPY, Spider, or this S&P 500, it beat the hedge fund. It beat all the financial at any time. So that's the reason why Warren Buffett do not suggest you to put the money with this financial advisor. I agree with him 100%. That's why we refer you. Since 1989, I've never used a financial advisor. Okay. Do you think MBA is a good investment for yourself? Yes. For me, investment is for your future return divided by your cost. My MBA was zero cost. I did not pay for it. It was a courtesy IBM. You take anything divided by a zero, it's infinite return, right? But for me, MBA changed my career, changed my perspective, created me so much opportunity, and I meet my wife there as well. So to me, it's a great investment. But MBA is not for everybody. You could call me stuck up, but today's environment, if you go for MBA, you should go for the top 10. Because there's a huge difference between the top 10, the top 20, the top 30, and the rest of the MBA program. Okay, similar people are asking non-actionable question. Trade opportunity, full goal. Okay, you know what? I think this question is good. You know what? Let me go through the PowerPoint because give me some idea, and then we come back and address the question. Otherwise, we might not have time. Okay. So, one of the things that I want to think about is one of the key things about investment and life general is how do you think? How do you think? Today, we have too much information out there. People like Keller, a data scientist, make money by organizing this data, this information and data. But then, how to convert the data and knowledge? That's why you go to college. That's why you do all these things, right? The professor really good at knowledge. But convert the knowledge inside is different story. Very few people get the knowledge to inside. That's why a lot of professors, they're great finance professor, they allow you making money in the stock market. Having knowledge does not mean you have an insight to make money for yourself. And then if you have an insight, does not mean you know how to make decisions. And more importantly, some people know that this is the right decision, but we never put a trigger. For me, I put a few houses in the bottom of the market, but a lot of people hesitate. They say, oh, it might go further, right? So that's the thing. The key thing is that the bigger challenge is how do you convert information that's too much now in the decision making and carry it out to make money for yourself. And that's the tricky part. One way it allows you to be a better thinker is simplify everything. Warren Buffett said, the greatest cyber intelligence is able to explain very complex idea simply and concisely. Right? That means you speak in the language such a way, you talk about college topic, but elementary school kid will understand what you said. That is difficult to do. So the critical question you ask yourself in terms of wealth creation is, how do you develop your independent critical thinking skill set to create wealth and make investment decision for life? My objective is I hope if you decide to enroll this class, go in detail, I want you to teach you this skill set. Okay, I talk about the general thing. I talk about investment psychology. Human behavior, economists believe that everybody is very rational. But the reality is, look at what's going on in investment and on politics. A lot of people are irrational. They make decisions against their own interests. This is a typical chart for retail investor. Normally, to make money, you buy low and sell high. Most retail investors, they buy high and sell low. It guarantees you make money. That's the fastest way not to be a millionaire. And this also some of the market emotion type of thing. I don't want to go through it. And this chart allow me to wait before jumping too early. That's the reason why I knew the real estate market crashed in 2007, 2008. I went 3 years before I went to buy my first house. I wait for 8 years from the beginning, from when I come back to the US until buy my first house, because I understand the psychology of how the market reacts to it. And then what are the investment habits? I share this in the group, and I would suggest you after this class, go to spend $10 to $15, buy this book, read it. If you read it, agree with most of the principle, you do not, and follow it through in the next 20 years, with your income making average $150,000, you follow the advice. You do not need any advice. Any financial people will tell you you're going to be a millionaire by the time you're 35, 40. So this is probably the best investment you could have. Just go on there, spend 15, 20 bucks, buy this book, read it.
微信读书上有这个免费的书，我已经 share 到群里了。
Yep. Okay. So what are the habits? Okay. To explain to you why you're investing is bargain hunting. I would like to go shopping, right? I went to a store a couple of years ago. Hugo Boss suit is listed for $8.95. But it's on sale, $3.59. I get 60% off. That is the mindset required to get you to be a millionaire very quickly. Okay. By the way, I still drive the car that's 18 years old. Why? Because this is math. The amount of money I send my kid to private school each year, I could buy between 2 to 4 Mercedes a year. 2 to 4 Mercedes a year. But I did not do that. But I'm driving an 18-year-old Mercedes. Because we're talking about the mindset. Of course, you were asking, why do I spend so much money to send my kid to school? That's a different philosophy. That's investment, different type of investment. Okay, why does this kind of mindset matter? Because it's very applicable in real estate investment. You give me an example. I bought my house. I started looking at the house in 2011. The house I bought in the last peak was $1.2 million. When I bought it, Euro listed at 709. I paid 635. I wait for 10 months. Watch this house. The price dropped from 89.9 until 650. I went in negotiation with 635. So I get the deal at 635. And guess what? The house now worth $1.8 million. 3 times the return on investment. Because I use the bargain hunting. I have the patience. I know when to pull the trigger. Right? The mindset is important. Okay, tax planning. I talk about 401k. 401k, you know about it, is really contributing, matched by your employer, right? But besides 401k, you could do traditional IRA. This is really after tax. It could be after tax, before tax money. But you got to tax-free. You don't have to defer your tax, but you got to take it out, and you are 59.5 years old. Another one actually do not have the downside of traditional IRAs called Roth IRA. You could control maximum depending on your age each year. It's tax deferred. You don't have to withdraw and go forward. So those are retirement things. Do ASAP. And then other tax deferred reduction strategy, capital gain. If you hold it more than a year, it's now 21%. Otherwise, the tax in your ordinary gain. And then, I have used, I refinancing my houses. My interest rate is tax deductible. It's partially my mortgage is paid by Uncle Sam because I know how to use tax deduction. And for some of you who do not want 1031 exchanges, that's where you buy your house and upgrade it without paying again tax on the profit. Right? Another way to do it, have your own company, put large expense through legally, or use K1 income you will S corporation to avoid paying payroll and social security tax. So there's a lot of ways you could do, even though you do not make a lot of money, to save on your retirement, on your tax, so on your way to be a millionaire. Okay, investment. So today I'm just going to very quickly go different concepts. In the future, I'm going to dive into each topic. The 3 most important things about investment is 3 things. One is cash. Because without cash, you could not buy real estate. You could not invest in stock. Emotion. I went through emotion before. And third thing is information, which all you are good at. It's Berkel, you're you are a data scientist, or you're highly educated, you should be very good information. But information, I showed you the chart. Information is useless unless you carry all the way through now to make decision. Right? So the key thing, skills of investment, mentioned before, critical thinking and rational thinking. And for a lot of things that I share with you, probably less than 10% what I learned in Columbia Business School. I learned everything myself after business school. On average, I read 2 or 3 hours a day. How many hours do you spend to read book other than for your job? Okay. Understand the historical data information allow you to figure out whether you buy certain asset high or low. This gives you a PE of housing price to rent, and this gives you a PE of stock in the US for 150 years. So this kind of information is important because it gives you a benchmark. A lot of people say, oh, the interest rate go up now, you do only 3%. But look at it historically. Now it's the second lowest interest rate environment in 200-year history in the US. Now you were born in 1980. I went to New York City. The interest rate for a house was 15%. Now you probably get your mortgage at 2.5, 3.75%. You think it's expensive. Think about 30 years ago, 40 years ago, you pay 15% of interest rate. So this can give you some perspective what's going on. One of my learning is I learned from the great master. So I read every article about Warren Buffett. I organize it. There are 2 things I get from Warren Buffett is 2 things. One, try to be greedy when others are fearful, and then try to be fearful when others are greedy. But less than 5% of investors could do that. That's why I see the chart. Investor determines buy high and sell low. This is just the opposite. Okay, I'm going to also show you that they will count on making a good sales, but have the profit is so low, then even mediocre sales give you a good result. Guys, really, you buy so cheap, you can sell anything, you can make money. I'm going to show you example what I have done on this principle. And some of you probably heard Don Wing Ping. Actually, there was a very good article. I think I afford to Kello. It's about 130 page. Don Wing Ping actually said a lot of very good thing about investment success. And actually, if there's interest, I can hold 2-hour class on talk about his philosophy, because his philosophy is very similar to Warren Buffett. And also some of this, he also thinking about independent critical thinking, rational thinking, and really focus on what you do and believe in yourself. Do not think that everybody in this social media group agree with you, you're right, but sometimes not the case, right? And then Warren Buffett the same thing, don't borrow money, do not do short, only invest things that you understand. I stay away from Bitcoin because I don't understand it. I'm too old for that. Okay? So how you define what is a good business? To Don Wing Ping, a good business, good company, number 1, is the right business, have the right people, and the right culture. That he could buy in the right place. On the surface, it's very simple, but it's very difficult to really figure this out. So based on my 40-year experience, actually, when I was in Columbia Business School, I took a class on value investing. Warren Buffett was a guest lecturer. We reference you. I learned nothing at his class. 1994, his stock was $3,000 a share. Now his stock is $400,000 a share. If I learn something, I need to buy one share, $3,000, and now it's worth $400,000. But I did not learn anything from him. I was too young, too naive, and did not have the mindset to learn from him. But over the past 20, 30 years, I go back to, especially past 10 years, I go back to value investing. I start develop my own methodology on value investing. So I follow through with okay success. Real estate investment, first you got to understand what is a real estate investment, understand what the business model. There's a couple of unique things. I never realized the investment until 2003. I articulate and thought through these couple of years. Real estate investment is must have, right? You don't need an office, but you need a home. Number two, recurring revenue once you rent it out, unless you have bad tenants. The tenant is going to pay you on December 1st, January 1st. And also, you don't have to actively manage it. Like you have to go to do your job every single day. You got to produce a code. You got to produce some data that your boss get on you. But most real estate, in a year, a few times, you got to fix your plumbing, call a plumber, and fix the furnace. That's all you do. It's really, passive. It's a power compounding, right? And I bought this house at 650. In about 10 years, it's triple. It's because part was lucky, part is compounding, right? Just keep. Of course, you need to buy a right city. You buy in Detroit, you're still under the water from 1960. So, and real estate is actually a very good hedge against inflation. It's really a very simple business model. The beauty about real estate, you do financing. Basically, Uncle Sam guarantee you and subsidize you, give you 60, 70, 80% financing. All your tax and mortgage is tax deductible. And you know what? If you wait long enough, you're going to make money. I know a few friends who bought their house. One friend hiking with me, she bought her house at 2007 for $1 million. For about 6 years, she was suffering. It went from $1 million down to about 700,000. Guess what? 14 years later, she's in $1.5 million. She's smiling. So if you're long enough, you come back, unless you're in Detroit, okay, or somewhere in Mississippi. So, but there's challenge of real estate. So the more you do, you gotta understand it. So once you understand the thing, then I use this finance game, data game, emotional game that I develop a methodology. How do I take advantage of the real estate business? And then, and I mentioned before, real estate financing is a very good thing. In the bottom of the market, I took out $500,000 to buy a couple of houses. And guess what? By now, I did financing it. I defined total about $750,000 out. That means I get back, not only I get back my $500,000 I put in down payment, I get extra $250,000 out. That means my equity and all my house is negative $250,000. If the bubble bursts, I could walk away, I still net $250,000. That is, how to play the game of refinancing. And by the way, all the refinancing, part of my refinancing cost is paid by Uncle Sam because deduct from my tax. Right? One thing allowed me to avoid the last bubble when I saw this chart in 2005. I said, this historical number real estate, this is crazy. I stay out. That's why I stayed for 8 years. It turned out was the right decision. In 2007, 2008, I was in Hong Kong. I was in Hong Kong. I was hedge fund director. And this guy saw us a chart. I looked at it. Japan was like this. I was in Hong Kong 1995. In about 2 years, it doubled. I bought my real estate after down 30%. By the time SARS happened, it down to 40%. The good news, I did not panic. I sold it here, I break even. So the real estate, if you hold long enough, you'll be okay. When I saw this chart, we all agreed that the US is going down. That's the reason why I did not charge the real estate. That's what saved me. The question, how do you know it's time to get back into real estate? I saw this chart in 2015. That's indicating that this is a cost of buying, and this is the cost of renting. Normally, in the last bubble, the cost of buying is so much higher than renting, that you are avoiding it. Now, at the bottom, the cost of buying is so much lower than renting, then you buy. And now the cost of purchase is probably similar to renting in some market in Seattle, a little bit out whack. So that's why I'm not buying any property in Seattle since 2016. I miss 20-30%. I'm okay with it. So that is the information is important. That's why investment information key component. If you have this kind of information, you know when to buy, when to sell. Okay, so I'm talking about how do you know buy and sell? This is some of the data. I'm gonna go through it, and then I have another house. I bought a 2013. It's nearby Ballet Locks, and it's this chart. All my house I bought is similar chart. At the peak was $739,000. When I bought it, it was yearly price at about $620,000. I bought it 500 and was bottom out at about 504. When the market value is 618, I paid $525,000 for it. And the house now is worth about $1.2 million. I'm a bargain hunter. I buy when nobody wants it. I buy a great deal. Just wait. The power compound. Time is your best friend. Right? And my rent went from when I bought it, went away $2,400. Now my rent is $4,200. But part is I'm lucky. 水涨船高, right? The tide raised the boat. So I actually, before I bought a house, I have a ration. I think about the reason why I want to buy this house. And then before I put any money, put an offer letter, I do a financial analysis. I build a financial model, analyze, do a scenario analysis, okay? Case 1, case 2, case 3. The person asks 525. What happens if I pay $10,000 less? What happens if I have to pay $5,000 more? I do the scenario analysis. I build out my case. I do a projection. What's going to cost for renovation? What's the rent going to cost me? And how much, if I'm going to sell for this much of money, how much I make? I calculate what return on investment is. So I do all this math because I'm pretty good with financial model. I get my MBA. So before I put even an offer letter, I build this financial model, predict where I'm going to make money at night. It's not making money, minimum 25% a year, I don't do it. Right? So then after you buy the house, how you create value. The key thing about anything else, I see a lot of people buy a house, just flip, do nothing, buy it, and hopefully you go up. But if you do not create value, if you are right in the timing, you make money. But if you do not create value, you lose your shots off. I normally buy a house where there's empty basement. I put money in renovate basement, create from 2-bedroom to 4-bedroom. That's why I create value. So to give you an example, in 2007, after all this thing, I did this analysis. I have a forecast, what I have to put in. This is actually what I have to spend. For example, I forecast I spend $25,000 for renovation. I actually spend $31.8 because I have to spend extra $3,000 for buying a stove. I did not anticipate it, and the budget was about 10%, which is not bad. Then I kind of I started with only $2,200, and then by 2013, it went up to $3,000. Now it's $4,200. So the average return before was based on 2017. My annual return was 53%. That's why when the real estate developer asked me to invest in real estate, they promised me 20%. I said, why do I want to invest in you when I made 53% return on my own money, right? So, and then my house now is worth $1.2 million. I checked last week. Okay, so with all this experience, I built the wheel of fortune for value investing in real estate. I have a methodology. So I'm going to spend one section talk about real estate investment and go through this whole methodology with you guys. Okay. And then these are the mindset summary of how you do invest in real estate company. Okay. How do you invest in private company startup? I know a lot of you want to start. Okay. Lu Qi actually have a very good way. How do you identify startup? He says intersection between demand, market, and technology. Hopefully you have a product. That's what you want to invest in, right? For me, the way I look at the problem this way. I look at whether invest or not is like this. What problem is this company going to solve? Second thing is, do I have the confidence, the knowledge to assess what the company is doing? That means I know what I'm doing. Number three, do I have the resource to make a difference? Either resource could be money, time, or relationship to make a difference. If I don't do anything. And it's the same philosophy Warren Buffett said, buy low, sell high. So what's my investment criteria for this kind of thing, which is different from stock and which is different from real estate? Number one, I look at it. Can I create value? Number two, how much money I need to put out? What kind of capital do I invest? And what's my payback period? Number three, how do I exit? Number four, what is my margin of safety? But if I lose anything, can I afford to lose it? So essentially, those are the four criteria I use to invest my private company or startup. 3 years ago, I bought a software company. This company originally asked me to be a consultant. The company is in trouble. And then I was a consultant for a month. Then a month later, I become a CEO. And I have an option to buy the company in 90 days. I bought the company. Why? Because I think that the problem itself is to really integrate Outlook CRM software. I'm a turnaround specialist. I work at technology I was an engineer for 6 years. I run an IT product company for about 2 years. So I have about 8 years experience on IT. I have management experience. I said I could do it. The resources. And then because I used to, I bought and sold, I helped restructuring a public listed company. I would turn around business. I have about 10 years experience in software. So they said, okay, I could do it, right? But more importantly, I go to my 4 criteria. Number one, can I create value? Yes. Number two, what kind of money up front? For a company with $1 million revenue, you know how much I have to put up front to buy this company? $50,000. Okay. Then I structured a deal. The company involves me over $1 million by structure based on the future profit. So my financial risk is $50,000 upfront. Right? And then how do I get out? I did a calculation. As long as I stay more than 8 months, I will get my cash back. Because afterward, I spend a little bit more money for salary deduction type of thing. So as long as the company does not blow up in 8 months, I make my money back already. So I've been there for 3 years. So I'm more than enough to get my money if the company go down 0 today. Right? That's kind of my exit strategy. Because I bought so low, and I only need 8 months to get my cash. Therefore, my risk is minimal. So that's the reason I bought the company 3 years ago.
Hey, YP, it's the time check. It's 9:05 already.
Oh, 9:05. Okay. So I'm not going to do startup thing. It's similar thing. Okay. Last 2 slides. Risk management. You do textbook. They said risk happen once every 100 years. Yes. 400 years ago, the risk happened once every 100 years, every 50 years. But look at the past 20 years, risk major blow up every few years. So do not believe what people will tell you. Okay, that means risk has increased the frequency. The question is that how do you manage the risk? Realistically, Warren Buffett said, risk is not knowing what you're doing, right? There's a lot of risk, reputational risk, all these things. I don't have time to go through it. Summary, okay? Summary is, I cannot go through the view of fortune. Realistically, investment must match your personality, your value, your skill set, your experience, and resources. I mentioned before, when I was early 30, late 20, early 30, I took Warren Buffett's class. I did not have the personality and skill set to appreciate value investing until when I became in the 40s. Then I truly understood it. So not everyone will understand value investing. Not everybody gonna understand real estate. So therefore, some of this does not match your personality. It's not gonna work. That's number one. Number two, 这个中文其实讲得非常好，财无易皆难。You could not make money overnight. Money is accumulated over time. Of course, there's always exceptional rule like Mark Zuckerberg and Bill Gates. But are you Mark Zuckerberg? Are you Bill Gates? You want 1 hour 7.5 billion people. If not, you got to do it the hard way. Anyway, finally, these are 5 books I highly recommend you read to be a better investor, better person, better successful professional. Relate to investment, Millionaire Next Door, Intelligent Investor, Warren Buffett got the best investment book. We were from year 1993 at Columbia. I bought this book for value investing. I read a couple of pages. It drove me sleep. I never picked it up until 10 years ago. I finished half of that. I did not finish. I just finished beginning to end only last year. But it's a really good book, but it's very boring. In terms of managing your career, read the book by Harvard Business School on managing yourself, especially an article by Peter Drucker and Clay Christensen. Those 2. For pure value investing, Jiang Lui has a very good book called 价值, and he's one of the very successful value investor. And how to be a better person, deal with people, investment mindset, be a good manager. Highly recommend you 论语, 孔子的论语. Anyway, so that's all I got. And here's my contact. Feel free to reach out to me in my email or WeChat. But because I have so many requests from WeChat. If you have WeChat, you just say you're in this class today, and please tell your full name. Normally, I do not accept WeChat people if they use someone XYE. I don't recognize. So that's all I have. I'm more than happy to take any question you have here, and really appreciate the opportunity to share with you my kind of 30 experience in 1 hour. It contains everything in 1 hour, which is impossible. But of course, Kelly and I thought about if there's enough interest, I'm more than happy to offer a class, maybe expand it about 15 hours to go through every single topic I touched on today. Okay, let me go back to the question here. Okay, buy a prop. How do you decide when to buy it? Okay, let me see what I asked. How do you think trading individual stock? I talk about that 925. Non-financial rights. Okay, the MBA. I talk about that. It seems like people ask non-actionable question. Okay, address that. 资产 minus 负资 that yeah, that's your net assets. Okay, what is the change? What's the change of national interest rate impact your stock investment decision? So what? You know what? Most of my investment, because I'm a value investor, has not been impacted much by interest rate. So it's not going to impact my investment. Actually, you know, the biggest portfolio I have is Chinese stock. We're relatively Chinese stock, really cheap. And I also have quite a lot of Warren Buffett stock myself. So, and then how to decide when to buy a property? I told you, you know, when the rent When the rental is more expensive than they're buying, then I buy. And when the rent is cheaper than a purchase, I don't want to buy. So that I saw the chart. And then as a follow-up question about frugal, how do you have some specific goal for saving investment? The basic cost of living frugal does not impact the amount of money they want. I think this thing is really how much you spend is you should make yourself comfortable. Whatever you define comfortable is. For example, when I start my startup in Hong Kong with $3,000, my wife had a job working Citibank, and so basically one thing we realize is that we need to maintain our lifestyle. What does it mean? I mean we could still live in an existing apartment in a very good neighborhood. We still go on vacation. We still go out with friends. We still do social activity. We don't want to cut back to a point that we're going to, be living in poverty. So that is not wise. So in terms of frugality, it's really depending on your own lifestyle, what you value. You do not want to cut back to a point it's detrimental to your lifestyle, to your relationship, and to your basic quality of life. So that's important. And then what is it just stick to a risk avert to create wealth? I thought that in suggestion to give to risk avert to create wealth, maximize your 401k, put in index fund, and let time take care of itself. That's one of the way I mentioned beginning, just in case you missed in the beginning. What's the risk-free money market? Supporting the government. Yeah, risk-free money market, yeah. But risk money market now give you 0.25% interest rate. Historically, the return on stock in the US about 6-7%. On historical, we past 100 years, and return on real estate about 6-7% a year. The question you need to make for yourself is, for the safety risk-free, you got 0.5% a year, 0.25% a year. The inflation is 5%, 6%. You're earning negative 5.75% a year. Why do you want to put money in the risk-free government fund? Again, it's your decision. Of course, the market goes down 20%, you look pretty. So that's right. And the slide would be, I think we're going to share this this video. The slide probably will probably not be shared. Okay, we are going back to the detail on 10 session. The economy will be shared, right, Keller? Okay, negative mortgage payment. Negative mortgage payment. What do you mean by Chen Sing? What do you mean by negative mortgage payment?
I think she means negative cash flow. When you talk about the rent is higher than or lower than the purchase.
Yeah. So basically, when the rent is lower than your purchase, right? That means the mortgage you have to pay, right? And that is the time that you need to might not be the time to buy. That might be time to rent.
I think there was one of your graphs that mentioned there's a negative mortgage payment in the purple line. Yeah.
Negative.
So, but I think it's in the percentage. Yeah. So I can understand it now.
Okay. Yeah. Okay. I'm glad that answered the question. Well, basically, negative mortgage payment is not really negative mortgage payment. It's really, you never really have a negative mortgage payment. But what you have is, in my situation, my rent is much greater than my mortgage insurance, and therefore I earn cash from my property. Does it make sense, Chen?
Sorry, I may have some problem to understand this part. Yeah.
Okay. You know what? Why did you send me a WeChat? I'm going to state what your question is exactly. I'm going to address it individually. How's that?
Oh, that will be very helpful. Thank you so much. Yep.
Yeah, the topic of the 10 section will be basically go through my wheel of fortune. I'm going to go to each of the 8 points individually. And then of the 8 point, it is 1 point. I'm going to do 8, but 3 point will be focused on investment. We're going to go through investment in real estate, investment in stock, and also invest in private company and startup. I'm going to go through those, and plus I'm going to go through portfolio management, how to look at the bond, how to look at the ETF, how to look at index fund type of thing. So I'm going to spend more time on that. Okay. So, okay, think of your lecture for return on real estate. Have you considered maintenance costs, potential lawsuit, but yes. There's always, as a landlord, there's always a maintenance cost. There's always a property tax. There's always lawsuit. That's cost of doing business. If you do not want any of this hassle, do not own real estate. You know, my real estate, I rental house, my expense on fixed house average is about a few $100 a month, a year, except when I have to replace the furnace and things like that. Why so cheap? Because I'm very handy. I was trained as a carpenter at age 9 and 10 years old. Because those days, my father labored a Yao Pai wiring. My father told all the sons, he said, when I was 9 years old, he said, you know what? 我是右派, you have no future. You gotta learn the skill set. So he want all 3 sons to be a carpenter. At age 9, I really hated it. Especially I had to sharpen the tool. The stone, sharpen the tool, I really hated it. But turns out, I really appreciate what my father would ask me went through for 2 years. Because now I could fix my car, I could fix a lot of stuff in the house, I could fix the toilet. I'm the kind of guy who drives a Mercedes, go to a rental house and fix the toilet. That's why my maintenance cost is a few $100 a year. Right? Because I have the skills on how to do it. I could do my painting, I fix the stair, I fix a lot of woodworking stuff. If that's not your cup of tea, real estate investment is not for you. That's why I said, and even my last slide, I said, investment style has to match with your personality. Right? And after maximize 401k with company math, would you recommend to maximize all the, yes. This question is that after maximize 401k with company math, would you recommend to maximize all the Roth, backdoor Roth and other pre-tax? The answer is yes, provided that after you mix all these things, you stay enough cash to maintain your lifestyle. Okay, what is the financial risk in the next few years? The financial risk, number 1, the stock market could blow up down 20, 30, 50%. Number 2, geopolitical issue. Maybe there's a war in Taiwan between the United States and China. Everything all bets off. Number 3 thing, the US inflation is going to create a lot of problem. By December 15, if the United States Congress do not get their act together, extend the debt ceiling, we're going to be in trouble because it will be for the first time in the US history. And then the pandemic continue to be headwind for everybody. The key thing about risk is nobody could predict what is coming up next in the future. The key thing about risk management is always prepare yourself for the future. The reason what saved me and my family, I still got afford to pay my kid to go to private school at 2008, 2009, 2010. I was lucky. I sold my house in Hong Kong. I have a few $100,000 cash in the bank. So the rule of thumb for myself, I have minimum 2-year cash in the bank any given time. That's allowed me to manage the risk because in my lifetime, I see this couple of times. Okay, given the current situation, do you think it's cheap to rent or go for a mortgage? I answered before, it's situational dependent. If you depend on what you want to buy, depend how big the space is, and also whether you want to buy a house and sublease to your roommate. My nephew, he bought a house in North Carolina 3 years ago for $97,000. His mortgage is about $300. He's by himself. He has 3 bedrooms. He subleased 1 room to a roommate for $500. So he's instantly cash flow positive, right? So there's more into it. It's really not only buying a house, what kind of house you want to buy, how much can you rent it out yourself. You want to keep 1 room, but the downside, you got to deal with the roommate. You want to deal with roommate. It's a hassle. There's a lot of trade-off you need to think about, right? Okay, those are all the questions. Any other questions you might have?
OK， 我讲一下这个课程的 structure 是什么样的，就在我 slide 上面稍微重申一下。这个课程刚才 YP 也说了，就是解释它的 YP's Wheel of Fortune for Wealth Creation， 就是刚才他讲的那个圆圈，然后其中的几个小点哈，我们每一个 class 都会深入的去讲细节。然后 target 是30到50 people， 我们 maximum 就是50 people， 我们不会再加进来其他的人了。然后 format time， 我们现在在讨论到底是10节课，每一节课是1个半小时，还是说6节课，每一节课是2个半小时这样子。这个的话我们会去做一个 survey， 然后看看大家是想给他就是每次课程短一些呢，还是每次课程长一些，然后就是这个调整一下哈，看看大家的 preference。然后这个时间的话就是 every Wednesday from 8 to 9:30， 就是 fixed time。We will skip Thanksgiving and Christmas holidays。然后 charge 就是每个人$300，然后就包括所有的 class。我们会 provide a receipt。如果你想 reimburse 的话，你的公司可以报销，比如说像微软有个那个 financial 的这个 perks， 对吧？所以我们可以报销。当然，如果不能报销的话，其实300块钱每1个小时，也就是20块钱。我觉得这300块钱还是能拿出来的吧。最起码说这是一个对你自己 millionaire 的一个 future investment。我觉得$300的话，也就是两顿这种Seattle 是吧餐厅节的这个2顿饭而已。所以说，我觉得应该对我们来说没有什么问题。prerequisite 是 read the book of the Millionaire Next Door 那本书其实是免费的，在微信读书上我已经发到群里面了。然后如果大家谁有 interest 的话，就可以开始报名了。我等一会把那个报名链接发到群里面，然后就是按照我会把 Vimo 发到群里面，然后就是按照交钱的顺序进 class， 然后到50个人就满。如果不到30个人的话，这个课程就可能会没有了。所以就是我很感谢这个 YP 可以给我们这么细节的去讲他的一个经历，包括他自己的一些很 personal 的东西都拿出来讲，这个是我觉得很难得的一个机会。所以这也是为什么我愿意去跟 YP 合作来办这个东西，因为我们大家都是希望在这样一个环境下去学习。那么更重要的是，这个会形成一个 investment 一个 mindset， 然后我们自己在这个小的这个 circle 里面也是会共同的成长。因为我在上 YP 的课的时候，就是 YP 他说他们现在也有一个比较固定的这样一个圈子，然后每周都有一个 investment 这样一个讨论。当然他们都是一起讨论了20年甚至20年这样的一个经历，所以我也是特别就是非常的 admire 这一群人可以一起成长这样。所以如果我们浪群可以有这样的，但凡是10个人，我觉得也是很 valuable 的一件事情。所以就是对这个 class 就是大概的一个 structure 就是这样的。然后如果有什么其他的细节问题，可以过来加我。还有什么别的问题，小伙伴们？
想问一下，这课是什么就是时间，然后如果时间不合适的话，会有录播吗？
对，我们会有录播，然后时间的话，基本上就是固定在周3，当然我们会 skip holidays， 所以也就是说，你只要是你在上班的时候，你晚上就是留出来1小时到2小时的时间这样子。对，还有什么其他的问题 ？OK。如果没有其他问题的话，那么我们今天就先到这儿，因为现在已经9点多了，所以大家应该可以开始要休息了。所以说有其他的什么问题，我们在群里面讨论。然后也非常非常感谢 YP 准备这么多东西，我们也希望可以听到你更多宝藏的经历，这样子可以让我们快速的变成 millionaire。当然可以缩短这个时间。
谢谢 Carla， 谢谢大家谢谢大家花时间听我讲的东西。
好，谢谢 YP， 谢谢大家，我们下次见，拜拜。
OK， 拜拜。